Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi, this is Shiraz Mian with the Zacks top stocks video. Joining me today will be Dan LeBeau. Dan has an exciting tech stock. I have a more of a traditional stock, Dollar General, DG. As the regulars amongst you know, I have long been a fan of this stock. I've held it in the Zacks focus list portfolio for a while. I traditionally pitched Dollar General for its defensive and counter-cyclical attributes, but that's not the reason why I like it for this moment in time. Those of you that follow Dollar General know that the stock has lagged the market this year, up about 8%, about 10%, about 8 percentage points below the market as a whole. And you would expect that type of a behavior from a stable as you go defensive type of retailer in this bullish and very positive environment. So valuation, while still premium relative to the traditional brick and mortar discounters, has come down 2-3 turns relative to where it was perhaps 9-12 months ago. But what I'm excited about and what I hope to hear more about as the company reports in about a month's time is greater clarity on a number of the initiatives that management has been sharing with us about top-line growth, about profitability improvement, about margin expansion. They recently shared with us one of those concepts, the store within a store idea that they implemented on 2. They plan to execute that on 25 in 25 stores as a whole this year. And this is just one more initiative that the management team has been extremely focused on in improving the performance metrics. Beyond these immediate issues, I've always seen Dollar General as immune to the Amazonification of traditional retail. They have an amazingly resilient business model that has stood the test of time. And in my judgment, if you have in your portfolio an opening for a traditional retailer that gives you defensive attributes in a potential volatile environment down the road, then you can do a lot good by adding something like Dollar General. As I mentioned, it's a premium valued traditional retailer, but it has super premium attributes in terms of its business model, in terms of its attributes, a trend that I believe will only accelerate and improve over time. With that, I'll pass it on to Dan LeBeau.
Thanks, Shiraz. I'm Danny LeBeau, editor of the Headline Trader Portfolio, and today I'm going to be pitching Skyworks to you. This company is a powerhouse of 5G chip technology and is ushering in this 5G revolution, being the largest, one of the largest providers of 5G chips to Apple, and it's growing out its verticals with the recent acquisition of Silicon Laboratories infrastructure and automotive segments. They bought that back in April for $2.75 billion. And this is supposed to increase Skyworks' total addressable market for a combined market value of $20 billion annually. The company is bringing in just over roughly $4 billion as of now, but their top line is taking off with 60 and 50% growth figures over the last 3 quarters, and we had a strong earnings last Thursday evening. But we've seen across the board with stocks during this Q2 earnings season, some sell the news price action that created a great opportunity to jump into the stock. We came down to 177 on Friday, but there was buyers there. That was just the morning session, the afternoon. Then got bid up to about 185, and then today we're going even higher with the rest of the chip market. And they have a lot of pricing power as this chip shortage that we're seeing globally. And as 5G continues to gain popularity and the iPhone 13 is released this fall, I think we're going to see a big tailwind for this company. 50% of the revenue comes from the iPhone, and Tim Cook just came out and said that iPhone demand, or 5G demand, should I say, is just heating up. He says this super cycle for this 5G iPhone is not over yet, and 13 is going to be another swell for that company and Skyworks top line. And I think this stock is currently undervalued, trading under 20 times forward PDE, and we've got a PEG price to earnings to growth ratio of 1, which is significantly below where it should be. And I think the stock is a value buy today for a long-term hold. This is Skyworks, ticker SWKS on TradingView.com. You can see the stock has had a good run since these pandemic lows, more than doubling since then. And you can just see we're kind of consolidating. We've been trading sideways since the end of January after the last earnings, and we actually had a pretty good earnings report, but we've seen this trend, like I was saying, in this Q2 earnings season that is, kind of a sell the news type of price action. And we saw that yesterday. The stock was down as much as 10%, but we got bids pretty early on when the stock was below 180 a share. We had some buyers just drive in and take this thing from 177, which was this low on Friday, to 185, which is about where it closed at, and we're even driving higher today. It is a buy. I think there was nothing even remotely bad about this earnings report. All we saw was positive news, more tailwinds, synergies from this acquisition from Silicon Laboratories. The infrastructure and automotive business is providing, like I said, a $20 billion annual opportunity moving forward here. And it kind of allows them to diversify away from their 50% Apple revenue. And I think we're only going to see good things from here. Currently, the stock is trading at 17 times forward PDE, which is cheaper than it was before this earnings report. And I love it. I love it bouncing off this 50-day moving average. And I think we're headed up to above 200 here real soon. We had a lot of price target increases from analysts, as well as EPS estimates just driving higher and higher, which pushed Skyworks into a Zacks rank number 2 buy, and I could not agree more. Skyworks is a great opportunity to jump on this 5G revolution bandwagon as it explodes into the roaring 20s, and I think there is no better time than this post-earnings sell-off on this dip. It's a tremendous buy. It's cheaper than it was before the earnings report last week, and I don't see any reason why you shouldn't start a position today. So don't forget to check out Zacks.com/promo, where we have 5 stocks set to double. So once again, Zacks.com/promo. Check that out. Thanks, guys.